All right. Hello, everybody. I have a bit of a cough. I'm sorry. Welcome to the Tech Bros Weekly podcast. We're going to be talking about how Robinhood crushed Q1 earnings. We'll also be discussing a little bit of Palantir and HIMS at the end of the show. But the main topic today, obviously, is Robinhood because we just had Q1 earnings last week. Oh, look who finally showed up. Tannor, thanks for joining, man.
We made
we
it.
appreciate it.
This joke is getting old, guys.
We really appreciate you taking the time to care about our podcast.
Yeah, yeah.
So
and I would say, Amit, your cough, either Ontology will cure that with Palantir or HIMS would cure that. But either way, we're talking about both those companies after Robinhood today.
Yeah. So we'll get into all those names. Tannor was here backstage, but we just made sure he wouldn't show up.
Oh.
So, you know, that's
honesty.
No, I want to be honest with everybody.
He wasn't late this time, guys. It was kind of weird.
I was the first one here. Does anyone want to say that?
He actually was the first one here. He was the first one here. Well, how are you guys doing? How's your week been?
It feels like a week with just today alone, with between personal life, work, and 2 earnings from 2 fascinating companies that I follow. So, but it's been good.
Yeah, it's been a good week, man. Drama filled. I made a video that I think has more comments than views on it. So that's always fun.
We've got to talk about that video later today as well.
Yeah, we'll get into that. But overall, good. Maybe I'll become a Palantir investor. Who knows? If the valuation continues to, upside to revenue, downside on stock price, that seems like a perfect setup for me.
All right. Well, let's talk about Robinhood. Dude, we had Q1 earnings on Wednesday. It feels like it was like just yesterday, but we did have Q1 earnings. Pretty incredible quarter. Obviously, Vlad put up the numbers, big boy numbers, real growth. I'm going to put up some of these headline metrics right here. I want to start with you, Roy. Before we get into the nitty gritty of it, just overall reaction to the numbers that Robinhood put up.
I mean, it's relentless execution at the same time that they're somehow able to do this. And part of it is technology, the excellence of the people that they actually recruit and employ, that they can execute at a high level again and again without like doubling, tripling, quadrupling their staff. Like it's so rare, guys. It's so rare. Look at almost every company, like go back 5 years that companies were public at that point. Look at what they were projecting out for 5 years, if they even went that far, when they said they'd be profitable. I was looking at just today, Roku. And I know Amit knows that one. And Tannor, I'm sure you know the company. They're still not profitable. They probably will hit it at some point, but they've had to, and, part of it is, hardware company too, but they've had to increase so much as far as their expense to also increase their revenue, which is not growing nearly as fast as any of the companies that we're talking about tonight. They're not executing at a high level. They're not being efficient, and they're barely going to be profitable. Robinhood, on the other hand, man, there's acceleration. They have so much TAM still left. Like people might think, oh, I'm late on Robinhood. I missed that one.
Yeah.
You have not missed anything. If you have a long-term perspective, you can invest now and you can lose money over the next year, 2 years, 3 years. The market can be silly. But dude, over the next 10 years, like this is going to be an amazing company to hold. And by the way, one short little anecdote. I had 4 different meetings today, not related to anything in the market. One of the guys there, he's like, yeah, I mentioned something about Robinhood. He's like, ticker symbol HOOD? I'm like, yeah. He's like, yeah, I own that. I'm like, cool. He showed me on the phone and I'm like, sweet.
Okay. Yeah. Tannor, your raw thoughts on earnings?
Overall good. I'm getting worried for Q2. Early on numbers don't look like Q4, Q1 numbers. And this company is going to be so stuck to what the market does, but in the same sense, that can also go both ways, right? Like, it was funny. I think CZ recently came out, like the founder of Binance, and said, Bitcoin's going to 500,000 or $1 million in the next cycle. And I'm like, man, if that does happen, Robinhood is going to be so well positioned. You don't necessarily need to pick a crypto company in order to benefit from these cycles, right? And so It's completely tied to the markets. It'll have its upsides and its downsides. The only thing that people should watch for is not the Wall Street numbers that are correlated to those cycles, but really what the company is doing and executing the products that they're putting out. And in Q1, they put out a ton of products, and I hope to see that same similar execution in Q2. So near the end of Q2, we're also going to see their crypto event, which hopefully even strengthens them more in one of their biggest revenue lines. So I'm more focused on the execution than the actual market, but obviously the market is going to determine their volume, which will equal their stock price.
Stock's been relatively flat post earnings. Anyone have any theories on why this quarter didn't gap them up 20%?
Yeah, we largely know the numbers going in, and they didn't publish April numbers right at the time. We do have some April numbers, and I'm sure that we'll look at those just kind of briefly, or at least you alluded to them. And we knew most of the numbers going in, so there weren't any like massive surprises. I was actually surprised as far as the implied move. I don't remember what it was now, but it was significantly larger than I expected. I'm like, okay.
Wasn't it a 10% implied move?
Yep.
Yeah, I sold a little bit further out of that in the money, but I'm like, there's just, if you know almost all the numbers going in, unless there's just something major that they announce, it's going to be a pretty tight range that it trades in, and it could go back and forth. But like Robinhood here, like it's not bad. Like it's been a much lower recently. Not everything's resolved. And then when we got the April numbers, like Tannor alluded to, I'll just throw those up real quick. Maybe we can just so people can see what we're talking about. They're good, but they're not amazing. And he did well. This isn't all the April numbers actually, but this is some of the early looks at those first contracts as well.
I didn't know they sold 4.5 million futures. That's a new one.
That was cool. And that's a newer product, and that's one that if you look at their margin on that, like they make more on that product than many others that they have. So that's a lot of actually. Wow.
Yeah, what is it again? 25 cents something. What is the rate that they take on that? 50 cents?
It's
I thought it was 50 cents.
75 for non-gold, 50 for gold, if I'm not wrong.
Yeah, I just don't want to get confused with the index options, because that's what I think the index option pricing is.
Yeah. Let me see.
Yeah, I think Tannor, you might be right. No, it's 50 cents. Robinhood futures.
Yeah, page 24 hours a day.
Are futures on Legend yet? No, I don't think so.
I've never traded them, so I actually don't know. But
I haven't heard that. So
yeah, it's 50 cents with fees per contract on futures.
Yeah, which is like roughly 75%
lower.
Here
It is. Sorry. Here it is. Yeah, so it's the cheapest across. Schwab's at 225, Robinhood Gold is at 50. So yeah, if you're not gold, it's 75 cents, I believe.
Yeah, so 4.5 million traded in April alone. I mean, that's 2.25 million. I mean, it's not, they're not going to take home all of that. There is but a lot of their costs are fixed. Some of that might go to the seat, but that's pretty good for a brand new product in 1 month. So that's exciting. But yeah, overall, like the numbers in April were like, yeah, it's good. We've seen better. I did like to see that 2x the Robinhood Gold Card holders to 200K in the last few weeks, just as Vlad had promised during that San Francisco event. So, it's good numbers.
Also, one thing here is equities and options were all-time highs in April. So crypto, that's going to be a little bit of an issue in April. Hopefully recover in May, but seems like the volatility was good for Robinhood.
Yeah, one of those things that was interesting too is like the take rate for crypto has continued to increase. What did you think of that, Tannor? And admit.
Say that again.
The take rate for crypto has continued to increase for Robinhood.
Yes. Yeah,
which is really nice to see. Like that's one of the reasons why the revenue came in a little bit hotter and higher than we expected. There's actually a good chart that I'll find here to throw up just so people can see, but I don't know, like that's pretty cool that they continue to be able to do that. They still have extremely low cost, probably the lowest cost. I actually even moved some crypto on the platform today just because I was like, I could go into a DeFi or a platform and sell it and save a little bit of money, but it's not much. Like, I'll just send it over to Robinhood and do it there, and it's connected easy to my wallet and everything. Needed a little bit of cash for something, so I was like, I'll sell a little bit of crypto for that.
Yeah, yeah. No, it's definitely going up very quickly. Now, some people are saying, "Oh, will Robinhood sort of lose their status as being the cheapest broker in crypto?" Because whenever they originally came on, they were 0.1%. Okay, now they're 0.55%. So they 5.5x'd their take rate, which is insane, by the way. Overall, however, I think Coinbase is at 1.5, 1.6, and that's all volume. So inclusive of Coinbase One, which no one or like not a lot of people seem to remember, which is essentially them lowering their trading fees. So that would impact their total take rate. So there's a large percentage of that volume that is essentially free, but it's not. You're just paying it from a different angle. So you're paying it in a subscription rate. Overall, though, there will be competitors that get close to Robinhood's pricing, but across the board, they usually try to be, the top 5% of brokers or exchanges that, are the cheapest. I think that they're going to stay there. You see that in margin, you see that in their APYs for, their cash accounts. You see that in the credit cards. You see that everywhere. So that's just their strategy.
And one of the nice things is when you have a really excellent platform, you don't have to be the lowest to still do very well. You can't be obscene as far as, charging much, much more than everybody else, because eventually people leave. But like we've seen Webull like offer more or offer cheaper rates or whatever than Robinhood, and still Robinhood's the one that's growing like gangbusters. I'm sure Webull's doing fine, but yeah.
So go ahead, Tanner.
No, I was just going to say that also the rate doesn't necessarily determine your chances of winning either. Like you look at APYs, for example, even I say this as a reason why people potentially might choose Robinhood over SoFi, but Lending Club, for example, offers a higher APY right now than SoFi, and yet they just simply can't grow. So it's not just APY that people are looking for. It could be a how well the product actually feels to use, or the features that are added onto that, or their breadth of offerings in terms of different cryptos or other products that they also add on. So it's not just how much you want to price that determines whether you're going to win or not.
For sure. Yeah, if you throw this up real quick a bit, this is the take rate chart from Yevgengus, online popular fintech. He said, this is the missing chart from Robinhood's earnings presentation. He made it himself. And it's like, yeah, it does tell the story of what's part of what's happening with Robinhood too.
I mean, dude, if they can get that to 0.6, I mean, I think they guided for it to be the same, so I wouldn't expect that, but lower crypto volumes with a higher rate, dude, that could help save the quarters where there's not a lot of crypto and take away some of the hesitancy that we have. I mean, if they were able to get that to 0.75 by the end of the year or Q1 of 2026, I think we would all really enjoy that. And it would still be way cheaper than Coinbase. So
that was my question for Q1 was, where does crypto take rate settle? Like, where do you guys think that's going to lead to? They kind of dodged the question a little bit. They said they're going to continue to experiment and add new features, so then it's more compelling for users, but they're going to find a sweet spot. Well, which I think is a fair answer.
And we do have a big crypto event coming out in June. And Bitstamp's closing. Vlad said a couple weeks ago he was giddy when he was hearing the products that they had ready for France. So, I mean, that could be an accelerant maybe towards the back half of the year if there's like real revenue producing immediate product like Robinhood strategies immediately. We got some data on that and we'll talk about it. But like if they can get that implemented pretty quickly, that could help boost crypto as well.
Yeah. No, okay, I'm excited for it. It's just whether the market's going to be strong or not.
Okay, so I want to talk about macro in relationship to Robinhood, but I want to throw some stats at you guys and just get your raw reaction. So let's start with strategies. 40,000 customers, 100 million AUM. Just raw thoughts on that stat.
I mean, it's a really good start. The question is, how well does it actually perform? If it continues to perform well, and I have seen a couple of people note how well it has done through the whole tariff picture. Like it's outperforming the S&P 500. If that's the case, that'll continue to gain traction. They also make it pretty attractive for. Did you see the 1% match? They do the 1% match if you're transferring 2 strategies. So
Yep.
It'll be interesting to see how fast that accelerates. But yeah, that's very promising.
I also find it interesting, like, 40,000 customers, 100 million in AUM. The selling point, or at least for me, in terms of their take rate there, was that after a certain amount, I think it was, what was it, 50,000, 100,000, it becomes capped.
Flat, yeah.
At, what was it, 100 and 250 bucks?
250.
Yeah, it's 0.25%. So yeah, 100,000 is where it's capped.
Yeah. So currently, if you look at their 100 million, you divide it out for their average AUM per customer, you're at 2,500. So you're probably not seeing a large bulk of these customers actually seeing that differentiation between other sort of robo-advisors, right? If you do not pass that 100,000, you're essentially getting taxed at the same rate as what a SoFi would give you, or Wealthfront, or what's the one I'm trying to think of? M1, these sort of platforms. So
yeah, I agree. I was just like, the fact that they got 40,000 people to put money into some robo advising thing. Like, I put $1,000 in it the other day. I'm going to get it to 5,000, and then I'll kind of show the journey of it. But that was just like, again, the user engagement on the platform is strong. They have to keep executing by making it a good product. But 40,000 in a month is like just obscene. And I think if they do a good job growing that, they can get that to 1 million people, hopefully, in the next year and a half.
Yeah, I just can't tell what. So I'm just thinking, like, is it 2,500 per user, or is it large?
I mean, it might be one guy with 10 million, and then
that's what I'm thinking.
It might be, so
like someone that really just wants to take advantage of the gains there, and then everyone else, like you, is just like, all right, I'll just see and put in $100. And there's someone that actually does want to throw millions of dollars at this, and yeah,
right.
It's somebody that's loaded like Tevis, that is an American that just threw 99 million in there, and all the rest are just regular Joes like us.
Yeah.
Okay, here's the next stat. Trade PMR, we got it done. 220 billion in total assets. 40 billion came from Trade PMR. We also bought back 7.2 million shares to kind of offset the acquisition of Trade PMR. Roy, your thoughts on the acquisition, if you think that's going to make a meaningful dent in revenue, and then the share buybacks to kind of compensate for the acquisition?
I mean, it's pretty compelling that it's immediately EBITDA accretive right away. That's awesome. AUM and everything. And I like the level of detail that they actually broke this out in the earnings. I actually need to go through it again, just because I feel like that there's things that I missed, because there's a lot of information there. But the fact that they're not diluting shareholders to actually be able to acquire companies like this is fantastic. One of the other companies we'll talk about later tonight, HIMS, that's a real fear and an opportunity. They'll probably acquire companies along the way, but they'll have to dilute to do so. And they have the opportunity to be able to do that. That's fine. But man, when you can snatch up whole things, they plug right into your ecosystem. You are able to get that done fairly fast. And it's just a natural next point of iteration as far as your company. That's really good, guys.
Yeah, I didn't get to go through a lot of those reports, but I think this had a lot of analysts pretty bugged, from what I remember. Devin Ryan lowered his price target from 80 to 70 based on this news that there was additional expenses that they weren't expecting. I need to go through it again, but there were reports there, and Dan Dolev also lowered his price target from 80 to 65 based on this Trade PMR news as well.
Wait, really? They lowered it because the OpEx was up for the year?
It was, I don't want to butcher the reports, but it had to do with Trade PMR and not knowing a lot of the additional expenses that it's going to come with.
But it comes with 85 million of they're that upset over 85 million of expenses.
Like I said, I don't remember the exact reasoning, but yeah, it was pretty across the board.
Well, that's what life is like as an analyst, right? I mean, to me, they brought over 40 billion in assets. I mean, if they didn't do the acquisition, AUC would not have looked as sexy as it looked. So
No, but anyone can acquire things. Anyone can acquire. Microsoft could have acquired Trade PMR and gotten 40 billion in assets under administration.
But the point is, they chose to go with Robinhood for a reason. So I'm like, it was a synergistic acquisition. Obviously, they have to make it profitable, but I don't know. I think as they can't wait for people to just get old and have their stocks go up, right? Like they need to be aggressive with accumulating assets. So to me, I thought it made sense. I don't know much about Trade PMR, but I'm just naively, I'm like, all right, 40 billion in assets, cool. Can we make money off of it? And do we not lose as much money off of it? But I guess the analysts are looking at a little bit more of a nuance there.
Yeah, and I think the story for Robinhood will look similar in nature to Amazon, where it's not just going to be a margin game. This is going to be a market share game.
Yeah.
And there's going to be a lot of things that they look at that actually lowers margins in different areas of their business, so then they can be the single largest player. And if you don't like that, this is not going to be the name for you, because it's going to be a strategy that happens over and over and over. Like, look at their pricing in every single product. Like I said earlier, like that's just what they want to win in market share.
Yeah. I agree. Okay, so last question on Hood, and then we'll move on to some other stuff. So they're going to lose, I think, about 50 million in net interest revenues when J-Powell cuts rates in June, which he's probably going to do. Do you guys think we can offset the net interest revenues with transaction volumes? Going back to your point, Tanner, is the market strong enough for people to just keep trading in Q2 if we get that rate cut?
I'll go first. Probably not on a quarter-over-quarter basis. But yes, I do think that this is much less, such a cyclical business. We have seen that whenever rates are low, they see more transactional volume. And then whenever rates are high, they see more net interest volume, or net interest revenue, I should say. So in my opinion, I do think that there will be a slight bump in the road there, but it won't last long.
Yeah, it all depends really why the cuts happen. If the cuts happen because, okay, tariffs are not going to be as bad as we expected, it's not going to increase inflation, and we basically won the war against inflation, equity markets will do extremely well, and then transaction revenue will make up for that. But again, like Tanner says, it might not be a one-for-one. It might take a quarter or two, but then you'll see that acceleration. And ultimately, like, interest revenue it's there. It's nice that Robinhood benefits from it, but it's not the main bull thesis of Robinhood that we have high interest rates for a long time, and Robinhood can make some cash sweep money off of that. But it just depends. If it's cutting because of a recession, I mean, the equity market is going to get just destroyed. And this used to be one of the things that we would talk about in 2022 and 2023 is rate cuts. A lot of people came out and they said, oh, it's really bearish for equities. It just depends on the reason why. And right now, it's frankly, it's too early to determine whether or not we're going to have a recession that leads to rate cuts, or all this tariff stuff kind of gets resolved and goes away. And then they say, hey, look, everything is pretty strong and good, but rates are pretty high. We've mission accomplished here. Let's go ahead and start cutting. Right now, June, I think, is not pricing in a cut, which is a little bit of a shift. So we'll see. But higher for longer is not bad either. If we just stay flat like this, that's good for Robinhood, actually.
Yeah, I mean, technically, higher rates actually makes them more money. And if trading volumes are relatively okay, then it's the best of both worlds. But
yeah, and really quick, a way to like think about the other side of that is, if somebody's like worried about that, as far as Robinhood, think about the flip side. If Jerome Powell comes out and says, hey, we're going to raise, by 50 basis points, do you think that's going to be bullish for Robinhood? They'll make more money off of interest revenue, but the markets will be crushed. That'll be a mess. It is bearish. So even if short term, they get a little tiny bit of a boost. So rate cuts are overall going to be a good thing for Robinhood, but maybe not immediately the first quarter or two.
Yeah, and
go ahead.
I was going to say, if the Fed doesn't give us a June cut, which that is still possible. I know the markets are expecting it, but if they don't, especially in Wednesday, if J-Powell gets up there and says, we're not feeling it yet, I mean, equities are probably going to take a hit, but Robinhood's going to keep their net interest revenues. And Robinhood should like in April, Robinhood actually benefited from the volatility to the downside. We all know they benefit from up and down volatility, but they really benefit. I mean, I did not expect them to have $6.5 billion of deposits in April, because the last time we had a nasty kind of carry in trade type of month back in August, they only had 2.5 billion in deposits. Like, people took their money out of the platform. So this was a real switch, and they didn't do any incentives and any 3% match or anything like that. That was organic, 6.5 billion with that volatility. So
There was no incentive during April.
was there? Am I wrong?
Crypto incentive, but that was it.
Yeah, the 2% gold transfer ended in March. They didn't do an IRA, like a rollover transfer, in April. I think that ended in March as well. So if I'm not wrong, an organic 6.5 billion, their second highest deposit month ever in a month where people should be afraid to put money into stocks, is, that was pretty.
I'd love to know some information then, if that was in April, Roy, what that does to the change in market share for them.
Yeah, it'd be
Do you
good
think
to
there's
know.
any change at all in terms of people actually, like, I didn't see that floating around too much. Like, I saw Robinhood posted, but I didn't see it going crazy from like a lot of the crypto accounts on X or anything.
The IRA transfer, for Aaron, who's saying that, was that a 3% rollover transfer? They have a general Roth IRA 3% match. Do they have an actual? Because that would explain why April was so good.
Yeah, I don't remember. I mean, we should probably just keep better track of those things in the future so we can take that into account and see what's working. But I don't know. We can always go back. But
oh, no, they did. It looks like until April 30th, 2025, you can earn a 2% match on all IRA transfers and all. Yeah, I think that was.
Okay.
Yeah. That was
explains it.
But still, 6.5 billion. It's not bad,
Yeah.
dude. Not bad at all. Along with
And
that,
yeah,
options all time.
And those rate cut probabilities are just 30% for a rate cut by June. So that's pretty low. And by the way, I was going to say, if you disagree with it, I closed the window already. If you disagree with that, you can bet on that with the events contracts in Robinhood. So
yeah, you can bet on the Fed either cutting.
I actually really like those. I don't like the sports ones, but I like those. They're fun.
Man, I think I'm still very hopeful on the sports betting thing. Well, I don't even want to call it sports betting. I want to call it Events Hub, because it'll be more than just that, but that it is a standalone product on its own, and that we see hopefully a large amount of adoption through there that would not have been Robinhood users to begin with. That's my hope. And my next hope is that they build something around gold that allows them to lower the cost for event contracts, or have some sort of benefit for event contracts as well.
Yeah,
I agree. All right. But last topic on Hood before we get into Palantir and Hims. So this is a guy who posted a bit of a bearish take on Hood today, and he might be on the podcast next week. I'm going to be in contact with him. His name is Emmett Peppers. Some people might know him from going all in on Tesla many years ago. But here's what he posted today. He says, I've shorted them at times. Long term, it's a short, in my opinion. Balance sheet is super weak, and in the next market crash, they could fail and go bankrupt, and their tech is more of a commodity. Anyone can use AI to replicate their artsy digital interface. Unless I'm missing something about Vlad being some historic CEO like Elon is or Bezos was, then I think their valuation is way too high, and they won't be able to keep innovating. Their valuation now suggests they will continue to outboard and grow into the largest electronic broker in the world over time. I don't buy it, but I also haven't studied Vlad enough to be that decisive to short a ton of it, because he's not a generational CEO, because maybe he is. I think we'll have a longer discussion with him next week. It's someone who I would love to have an open discussion with to kind of get his perspective on Hood. Any kind of raw reaction to that potential bear case that he has?
I'll in case he comes on next week, I'll save most of it for next week. But I will say, just from the way he's worded that, he does not sound very confident in his position, especially on Vlad. And I can say, as a guy that entered Robinhood, and I was like, hey, it's super cyclical. It's a great short-term opportunity. Long-term, it might be okay, but I'm just looking at the short-term. Vlad's an okay CEO, great products guy, but CEO, he's nothing special. I was wrong, and I've switched long, and I actually did that before I went to my first Robinhood event. Dog
shit balance sheet is funny too. I thought that was hilarious. I guess some investors hate cash, but Robinhood seemingly loves it, so they hold a lot of it.
And it's not hindering their growth. So
not at all.
Yeah, the only thing I would say right here, and again, hopefully we have a longer discussion, is I think, again, he's falling into the same bear case people made 2 years ago. Anyone can use AI to replicate their artsy digital interface.
Yeah, it's been tried over and over and over.
Yeah, why haven't they?
Yeah, I just disagree. And if no one actually, and they could, right? Theoretically, a company could replace them. But if you can't replace that user experience and UI, then you're just not going to get those assets. You're not going to get 40,000 Robinhood. Like all of that accelerates the ecosystem. So I think that first and foremost is what's important.
Yeah, in essence, one of the other issues too that happens with that kind of argument is you're looking at a company the way it is right there, and you're like, oh, others can catch up. But it's kind of like looking at a race where somebody has a tremendous lead, and it's like, well, if they stop right there and lay down, others can absolutely catch up, and they will. But Robinhood is not laying down. They're accelerating. So short at your own risk. In short term, like it's very macro dependent. It is cyclical. I mean, he can make money on a short, absolutely. And we can make money on the other side over the long term, and I think we will. But I think he's missing a lot.
The one thing I'll say here is the interesting thing here, and I hope I get to ask him this, is how much he doesn't like Vlad as a CEO, because this guy invested in Tesla 5 years ago, and from my understanding, he's made millions off of it. He's talking about valuation in that post. I mean, like Tesla valuation, like so it's like to make all your money off a stock where the valuation never matched the reality of the growth, and then to be bearish on Hood for a valuation question. But then all the stuff he's talking about Vlad, I think there's more so an idea that he believes Elon is like one of those CEOs, and he doesn't believe Vlad is one of the generational ones, which is fine to think that. But I think that's more of an argument than they can't grow into, because it's a way cheaper valuation than Tesla has ever been.
It maybe that's a natural pivot point, because I know we want to talk him, so we want to talk Palantir in just a second. But Tannor, we had a discussion last week, I believe. Man, these weeks have felt very long.
Yeah.
On Tesla and on valuation and on Nvidia. You had a video that came out where you dropped some big news. Do you want to share what's going on there?
I sold out of Tesla stock.
Whoa!
Did you really sell it all?
Sold it all.
So it's not clickbait.
Not clickbait. Was going to sell 80%. Sold it all instead because I thought, what's this 20% going to do? It's not, So yeah, sold it all. Put it all into Nvidia. Long, baby. But we can talk about that. I was going to say a couple of quick comments about the Hood thing, but let's transition.
Let me start off by saying I watched the video, and I think the hate in the comments was a bit unnecessary. Obviously, you can tell some people just don't like when you abandon the cult. I thought the video was exceptional because all of it was just, hey, Nvidia's cheap, Tesla's expensive, both are central to the AI revolution. I'm picking Nvidia, and that's the thesis I got. It wasn't really that much more complicated. So I think it was a great video.
I said in the video, I'm not going to give it 100% away. Let's give 99% away. That way people still have a reason to click. But essentially, if I had the option of choosing Tesla or cash, I would pick Tesla. Okay. I'm not betting against Elon. I think they have great aspirations. But if I were to pick Nvidia or Tesla, I'm picking Nvidia right now. And the valuation is not even remotely close. So people are saying, oh, how could you possibly sell before, 1 month before their Austin launch and everything like this? The whole market knows what's happening in June. Okay. This is not like it's not priced in the valuation. They have to 5x in their net income. Okay. Just to get to the exact same valuation is where, Nvidia is sitting. Now, this is free cash flow. I was looking more at PE, but yeah, you'll find it in there somewhere. But overall, like even that PEG ratio is 6, a 6 PEG. Now this is looking at both forward and lagging, price to earnings. These aren't close. Okay. And if you look at the earnings per share that Wall Street has going forward for Tesla, they're expecting massive growth rates, 50+% year over year. Like constant massive growth rates for $100+ billion companies. To have this valuation baked in as well is huge. And people are acting like Nvidia is going to stand still while that happens. And I just don't think that's going to be the case.
Yeah, I think for you, it's an absolute right move. It's a banger of a video. And I contributed to the hate in the comments because that's
you did. It's the most liked comment, I think.
Wait, what did he say?
Tesla can moon now.
Tannor was holding us back.
Yeah. And you know what? I bet you like 90% of the people that like that comment don't even know the relationship to Roy. Is definitely one of those videos where the majority of people that watched it they don't know me.
Yeah.
They have no clue who I am. It's funny because I saw the entire spectrum of people going, yeah, I just did this exact same trade, to, I disagree, but it's your money. I thought your argument was compelling, whatever, to, oh, of course, Democrats shouldn't hold Tesla stock. So, another woke loser gone. I was like, what?
Dude, the internet is like, you gotta have a thick fucking skin to do this shit, dude. Like, people say
Tanner's a big Tim Walz supporter. He voted for the guy, even though he's in Canada and not an American, and certainly not of that mindset. But sure,
Yeah.
the way.
You know what? I brought up the political issue because I think that it's impacting sales, but like legitimately owning the stock to me has nothing to do with politics. It's that sales missed expectations. Whether it's due to politics has nothing to do with the politics that I care about as a shareholder.
No.
Okay. But it did impact sales. Q1 was a huge miss. And we've been on a streak of missing. So whenever people look out forward to what Tesla is expecting, how can you trust what they're expecting if they're missing expectations by large margins? So this is essentially brought down. If you look at EPS over time for Tesla, I think 2029 EPS was at $2.65. Now it's $1.40. That's a huge difference. Now, obviously, that will be wildly different from whenever they get there, but these sales are impacting long-term growth rates. But overall, I think that another thing that I wanted to talk about as well. If I see potential to re-enter Tesla, I'd love to. Like, I want a much better valuation, much more certain growth, a pathway where I see the brand damage not existing. I'll completely re-enter the stock. And so everyone goes, oh, now he doesn't benefit from any optimism. It's like, dude, I can get back in 24 months, but I'm going to reap the rewards of what NVIDIA I think is going to do during that time. And then I'll re-enter with a heck of a lot more money.
Well, also, NVIDIA is making the GPUs for Optimus. So
exactly, which people in the comments were saying, in my opinion, inaccurate things about the role that NVIDIA plays here. But yeah.
And I'm almost broke. I've almost broken even on my NVIDIA. So it's like, yes, Tannor didn't lead me into a company that's going to zero.
Yeah. It was the big worry.
Yeah. Bankruptcy, like soon.
Yeah. I think it was a good video. I mean, I watched it. I think it made a lot of sense. And I don't think it's crazy to buy NVIDIA over Tesla right here. I mean, you're buying hype when you're buying Tesla, and that's okay if you have the time to wait. But if you think that you want a stock that's more attached to the nature of the valuation in the context of AI, then I think NVIDIA is, very obvious right here. Now, if NVIDIA is super cyclical and the AI revenue falls off a cliff, then maybe Tesla benefits, and it's a totally different thing. But as of now, the numbers are just showing a totally different story. Yeah.
If people want more information, it's definitely not just, Elon sucks and Jensen's awesome. That definitely was not the pitch. I've been a long-term bull of Tesla, and I still am a bull for Tesla's products. But it's just expensive. That's all. And the reason why I really wanted to initiate that trade is because I was talking to Amit and Roy about Palantir being expensive, and I'm like, Amit got me by saying, well, why do you hold Tesla? And you know what? There's positions in my portfolio that I've been holding for years that I just don't underwrite anymore. Like or at least I should be underwriting them constantly, but they're just super long-term holds. And they're easy to hold if they continue to beat and raise expectations, right? Companies can stay expensive if they continue to blow away expectations. If they start to miss large, that's whenever investors start to go, hey, why the heck am I holding this?
Yeah.
So that's all I got caught in. So thank you, Amit. Appreciate it. Unless it's a bad trade, and then which I'll,
Okay, cool. So the way these podcasts are going to work in the future, guys, is we're going to spend the majority of the first half of the show on Hood, and then we'll probably, if there's any important topics, we'll talk about other topics. So we do have a lot of earnings. So Hims, let's get into that. Tannor and I are not shareholders. Roy has been preaching the name for a while. I'll pull up
I'm a shareholder.
Oh, you own one share, okay?
And didn't you buy into Hims briefly, Amit, or did I imagine?
Yeah,
that?
but I sold.
What price?
I've got 3 or 4 shares.
Basically right where it's at. It's $40. So you made a quick return. There's nothing wrong with that. Sometimes that happens, guys. You set a price target for a company and you're like, hey, and it just does crazy things. So
dude, it was up 40% in 10 hours. Like I woke up, I was up $1,000 bucks. I was like, I'm out. Like,
yeah, in that I've got a whole video kind of breaking down the bear and bull case on him. So if you've never heard of this company or you've heard of it, but you've never really considered, I try to be balanced. I am biased because I am a shareholder in Hims. Tevis basically forced me to buy it because he wanted me to make money, and it's working out very well. But no, honestly, like I took a look at this company. I'd written it off for a couple of reasons. And when I actually took time to take a look, I'm like, okay, this is, I don't want to overuse the word generational, so I'm not going to use that, but it's a great company that's extremely well positioned. A lot of characteristics that are similar to Palantir in some ways, Robinhood in some ways. I think not quite at that level yet, but it's close. This quarter, phenomenal numbers. They beat on revenue, they beat on EPS, they crushed it. I wasn't even close. They stayed the same in guidance. I will note, I'm a Hims bull. This is the least important set of earnings that they have all year. And so one of those reasons why it is because they have the GLP-1 revenue, which is, is Zipic and that sort of thing, that they've been able to compound successfully. They could do that all the way through this quarter with semaglutide, which was taken off the shortage list, which means that I believe it's May 1st. So I think we're here now. Might be the next month, but I think it's May 1st. Let me double check that before I post anything. They can no longer sell that except under 503A pharmaceutical exception. All that to say is they can't do it like they did before. So yet, nevertheless, in the previous quarter, they guided for an extremely aggressive growth rate. Now this quarter, it was pretty fascinating. And yeah, those are the no debt right there. That's a big thing. And who broke this down? Is this your submit? No, Nate's. Okay. Nate.
This is a Hims, what I would call shill.
Yes. Nate,
so
Nate's going to get you to buy in. I'm going to get Tannor to buy in, and we're all going to make money off of it. So
I'm in. I just checked. I have 4 shares. I'm up 48%.
Yeah, more than just a gift. Come on, man. So tremendous quarter, and they're extremely well positioned. But as far as like long-term stuff, all 4 bear arguments that I go through, 3 of the 4 still very much intact from this. Margins were lowered partly because GLP-1 accelerated, and it's a lower margin product. Oh, stop right there. Scroll back up. We're up, right there. Ooh, those numbers. Nope, right below.
The first picture.
2030 estimate. They revised this and updated this as well. This is what they're projecting through 2030. For context with Hims, they have never once missed in their history, and they've not been public like forever, but they've never once missed a guidance as far as revenue. They have once missed EPS by a sliver. Before I was a shareholder, I can't remember exactly what happened. It's pretty likely that they hit this. They do tend to be aggressive, but look at the revenue where they're at. Like this is one of the reasons why, by the way, when it was trading, actually even like right around here, people asked me, it's like, well, where do you think Hims is going in 5 years? I even said it in the video. I'm like, this is a pretty easy 5X because I think it's a bit undervalued here. You look at the way they're growing. They're not going to do this every quarter this year. Next quarter will actually be a quarter-over-quarter slowdown. They mentioned that just because some of that GLP-1 revenue, which was a sugar rush that was temporary. This is not a GLP-1 play. It's a small part of the thesis, but that will hit them for 1 quarter. But yeah, ultimately, like they are growing rapidly. They do very well identifying the next big thing. You look at their market share, like they have this great slide after the quarter 4 earnings, kind of an investor update, where it shows them versus all their competitors. And they are growing and outgrowing their competition. And it used to be a bear case argument was, well, they're doing it just because they're good at marketing, which I mean, like you're going to hold that against them? Come on. And they're just going to have to keep spending for marketing to continue to grow. And they do, but not at the same rate as their revenue increases. So they are incredibly well positioned. They have incredible leadership. They have pretty good cost control. There is some stock-based compensation, so be aware of that. And I think that this is a platform where there's a lot of different monetization opportunities, especially as that subscriber base continues to grow. We'll see partnerships like the Novo Nordisk, which really is not so much about revenue, but taking the legal risk out of it, one of the bear case arguments. But as they continue to grow their subscriber base, more and more people will be like, oh man, we want you to put our product on there. Will that be high margin play all the time? No, but it's going to be revenue accretive. And just, I mean, like, it's an impeccable company that continues to hit their numbers and surprise people again and again, despite the bears saying otherwise. Last pit is it's profitable. It has been profitable for a while. They're not eligible for the S&P 500 just based on their market cap, but they will get there, I believe, one day. And yet their short interest, at least as of April 15th, was, I think, 33% short interest. Yeah. And I think the short thesis was largely like, oh, GLP-1 revenue will go away, and so they might have a slowdown in a quarter. That's dumb. I mean, look at where the share price. I'm not in this for a short squeeze, but this was like $70 2 or 3 months ago when they had a short squeeze. It just, this is reckless. This is stupid. And yeah, it's a great position company. So if you guys are not in HIMS, I'm not saying buy it right now. It's very volatile. It's the most volatile thing I own. And I own crypto. I own Palantir. Robinhood's very volatile. SoFi is too. This thing makes those other things look like it's a stable coin. So it's not for everybody. It's not for every portfolio. You get in and it could fall to $20 in like 3 weeks just because of the market and stuff, or it could go up to 80. It's crazy. It's wild. Do some due diligence. Check it out. You may not see the thesis. Don't invest in, but I think it's a great opportunity.
Yeah. Why did they end up keeping guidance the same while having a smashing beat?
Yeah, I think it was really because their Q4 guidance. This was actually one of those things I mentioned as a bear argument against HIMS in my video that I published less than a week ago, I think over the weekend, was that they had a very aggressive guidance that even me as a bull, I was like, ooh, guys, are you sure about this? Part of the guidance was, I believe, $725 million that they projected for their weight loss product for the entire year. And you might say, well, of course that they would project that because they didn't know that the GLP-1 would come off the shortage list. They did. And they revised based on that. And yet, nevertheless, they said, even though this huge source of revenue is mostly going away, there's some products and stuff, we still see $725 million in revenue from weight loss. Now, there are other lines. They have their oral product. They mentioned it has grown 300% year over year. It's a little bit disingenuous just because it was a brand new product back then. So
yeah, very small.
Take that with a grain of salt. Don't get caught up in the 300% number at all. But it's a meaningful grower. They have a nutrition line now, which is new. Liraglutide comes out in the second half. That's not a great product, to be frank. They have this new partnership as well with Novo Nordisk and a couple other aspects of that. But the big thing is to just look at the flywheel, look at the personalization. That's a big thing. I go over it in my video. I won't go over it here. I've talked to these guys about it. But in essence, they're ramping that. Like if you listen to the earnings call, this is their moat. They do a great job with marketing and stuff, getting customers. But if it was just the same old pill that you get anywhere else, it's like, okay, well, when somebody offers a cheaper incentive, they'll go over there. That's not what's happening with HIMS because of that customer service, the contact that they have, the AI inferences that they have as far as their MedMatch product, and the level of personalization that they're able to do, all while they have excellent cost control. They have their own compounding facilities. I don't know. It's very well positioned. They know very well what they're doing here. They had some exciting announcements this week that maybe I won't go into, but yeah, they've got some new C-suite guys too. So
you have a pep in your step talking about this company.
Oh man,
like is there like I've not heard you this excited since Palantir 2022. So
he's on the pills.
Robinhood gets me that excited. But I've been in Robinhood for a while. So part of it is it's a newer company for me. I've been in for like 7 months, maybe. And every time that I look at them, I'll see things that I'm like, oh, I missed that. Like not like bad things either. It's just nice surprise after nice surprise, just like this earnings. I saw a piece, and I put this in my video, and I don't want to say it because I might get it wrong, but basically it's one of those that they're talking about as they build out the ecosystem. And it is very much an ecosystem that they're building out, that they have a lot of opportunities for monetization of like where they're not even at right now. So they understand the industry. It's one of those companies where if you get a company that has no debt, that is able to scale their revenue far faster than their expenses, that they always seem to know what the next big thing is and they can iterate on that they control their own tech and tech stack, that they're not dependent on somebody else or the macro or something to execute, and they're really not. And they continue to execute at a high and efficient level. I mean, it's hard to bet against that company. Although 33% of the shares are shorted, so I could be wrong, but man, not everything is great with him. Like I when I go through the video and stuff, and I'll go and digest their earnings. I need to double check a couple of things. Not everything in this earnings is like fantastic, but it's mostly good. It's mostly good, and I'm very glad. By the way, going back to your question, and Tannor, I'm glad that they did not increase their guidance. I actually would have been concerned at that point because I'm like, guys, it's already pretty aggressive. So let's make sure that we meet, and they do every single time. Until they don't, I'm going to continue to bet on him. So
I am questioning why is it sold short. I feel like there's a red flag that none of us are looking at because look, Palantir's valuation is pretty aggressive, right?
Yeah.
Why are the shorts going after HIMS, which objectively the valuation is cheap, versus Palantir? Now you could say they're afraid of CARP, which is fair, but it's at $300 billion. You would think a short would be more interested in a company like that. So is there something we're not looking at? That's not like a fraud or anything, but just like maybe a lack of moat or something. That's
to be fair. I think companies literally, after executing so well, get a red flag on them where Wall Street just simply does not look at them like a viable short anymore. And I think Palantir, Tesla, these sort of companies have just passed that, and they do not get shorted anymore.
Yeah. So in essence, the bear thesis keeps changing a little bit, but the idea is there's a few legs to it. So lots of competition. We saw when Amazon entered the space, they had already kind of been in, but they announced some things, and the HIM share price just collapsed, like Amazon's putting them out of business, which is ridiculous. But I mean, that's what some bears really think. A legal risk, that there's a couple aspects of that. Some of it's FDA stuff, some of it's like the 503A. That's a genuine thing. Andrew Dudum has mentioned prior to the Q4 earnings results, so this is more than 3 months ago, that when the shortage list announcement was hit, he's basically talking about the level of personalization that they could do with semaglutide. And so a lot of bears were like, oh man, this is an opportunity. They're going to really shift a lot of the what they're doing and just argue personalization and say, okay, we can still do this essentially the same volume, but through the 503A exception, which is not what it's designed for. That would be a legal battle that would be very costly, and I'm not sure that HIMS would win that. They seem to shift away from that and move away from that even before the earnings call. There was like 4 days, a weekend. But I think that some still think that there's a legal risk despite the Novo Nordisk partnership, although Eli Lilly is really a lot less likely to sue or do anything, and frankly, they wouldn't win that anyway. And I think, there's questions on the tariffs, if that will impact HIMS. It will. They've talked about doing tariffs as far as pharmacy stuff. Trump does have an announcement that's coming out on Monday, I believe, regarding developing pharmaceutical infrastructure in the United States. And that is something that HIMS does and is involved in, but they're not a massive player in it yet. But there's some concern that, like, hey, most of the bulk ingredients in the APIs are in India and China. So if tariffs hit, then all of a sudden their margins are just terrible. But like the other piece too is they have this delicate balancing act where they basically said that they're aiming for 70% plus gross margins, I believe, over the next 5 years. And if they have partnerships, a lot of partnerships like they do with Novo Nordisk with the Wegovy, that's not a high margin product. They're not getting 70% gross margins off of that product. It just, there's no way. And so they're like, well, they might increase revenue a lot, but the margins are lower and then they're going to be terrible. It's like, that's just a dumb argument. So Martin Shkreli, by the way, had a great interview. He is a HIMS bull, actually, and also Palantir bull with HIMS House on YouTube. It's about an hour long. He actually goes through much further. He is a short seller that's classically known, also in the pharmaceutical industry. He had some really interesting thoughts on this as well. So if you guys are really curious as far as what the shorts might be thinking, I just think that they have a completely wrong perception of what's happening here with HIMS. They view this as a short-term sugar rush that once that GLP-1 stuff goes away, then HIMS is going to be desperate, stupid, and sued.
Tannor, are you buying?
No.
Why?
No, I don't know the space. I don't know why the 33% short. I mean, obviously the triple-digit growths look great, but I don't know why it's happening, and I've got a lot to learn in other areas as well. I'll be fine. I'm curious your guys' thoughts on Palantir.
I'm
Yeah.
curious your thoughts on Palantir.
Yeah. Why don't you go first, Tanner?
I mean, everything looks good. The growth accelerating. So one thing I didn't actually look into is Europe declining in revenue.
Yeah.
Okay. Because I think he said it made up for like 10%, and just the numbers didn't make sense to me. But yeah, I think it was 46% or 49%, excluding Europe, was freaking insane. You know, the margins on that are doing awesomely. I've got no hate against Palantir as a business. I think like it's a fantastic business. It's just expensive, you know, similar to Tesla. And not I mean Palantir's valuation puts Tesla to shame. So it's the most expensive stock in the stock market, and yeah, hopefully growth continues to accelerate and make it worth it for you guys to have that valuation. Now, can we talk about some predictions on price? However, to have some of the best analysts, or probably the most popular analysts on Wall Street, to come out and say that this is $1 trillion company in 2 to 3 years.
Yeah.
So he's including 2 years. So imagine 24 months that this becomes $1 trillion company. I'll eat this hat live.
I hope it happens.
I'll eat the whole thing.
I hope it happens because Amit and I will be rich. We'll invite you to our yacht party. You can be on his yacht or mine. His will be bigger, but you know,
you guys will have to bankroll me. But it's
2 years is insane, and that's not happening. It's not happening in 3. Probably I do see acceleration. Like you look at the actual earnings call, the comments, and it's so bullish. I was actually a little bit surprised based on prior comments that they didn't come in at least 40% revenue growth year over year. I predicted 44%. It was 39 or 38. I mean,
39. Yeah.
And they guided very aggressively too. And usually they sandbag. I think that they are. But I mean, their comments like 124% net dollar retention. The drag is from 2 things. One is the SPACs. They're still there. They're a small source of revenue, but it's decreasing. Eventually, all that essentially goes away. So they talked about like revenue ex SPAC. They talked about revenue outside of Europe. And this is a company that would be growing close to 50% in that scenario. But the reality is they're growing still not quite 40%, but it's very close. Accelerating. Like you look at let me pull. Well, I guess you can go ahead and Amit, but I want to show like maybe 2 slides from this earnings call that were actually I've got one.
I have it pulled up. Tell me which slide, and I'll pull it up.
Okay, so the year-over-year revenue growth it's at the bottom. But yeah, first the AIG slide where they do the R1 RCM, cities.
I saw the AIG slide. That's insane. It honestly is so insane. I don't even believe it. I don't even remotely believe it.
Yeah, but this isn't Palantir. Oh, up 2, 3, up slide 10, number 10.
Oh, here it is. Okay, got you.
Yeah, that one on the right. So this is from the AIG earnings call itself, that they expect their adoption of an AI-powered underwriting solution leverage AIP to double its 5-year revenue CAGR from 10% to 20%. And this is an old, slow, not tech-savvy company that's basically like, okay, we'll adopt Palantir AIP, and all of a sudden we're going to double our CAGR, not just over like 1 year, a nice short-term rush, but over 5 years, they've effectively doubled it. And then they had this great quote from Shyam Sankar in the earnings. And he said, you can hear more about these stories, not in our earnings call, but as Ryan mentioned, in our customers' earnings calls. If you have Quarter on your app, search the word Palantir. And it's not just Palantir that's talking about Palantir. It's AIG, Citi, BP, L3 Harris, Hertz, all mentioned the transformative impact of AIP on their most recent calls. This isn't just AIP Con either. These agents represent AI users, a supply chain agent that works with your supply chain analysts, the intelligent AI agent that works with their human agents. It's ridiculous and what they're able to do at a very high level. Now, the other part of it is, I've actually got it pulled up here. I can just show this. I'm sorry, Amit, I couldn't find the page number. But you can see here the year-over-year revenue growth as well as the adjusted operating margin, and then the silly rule of 80 essentially at this point. It's probably a little small, but I don't know if I can. Yeah, I can't blow it up. So remember this quarter back here, Amit? 13% year-over-year revenue growth.
This was a tough quarter. I remember. Yeah.
And I even said at the time, I'm like, yeah, if they're going to dilute me like this with stock-based compensation for 13% revenue growth, and that keeps happening, I'm going to have to rethink my investment. And then, of course, the AIP moment happened. The boot camp moment happened. That was their silver bullet. And I told Tannor and I told Tevis right here when they sold, it went up to 17. It increased. They sold out of their positions. I'm like, dude, what's happening here is acceleration, and they'll continue to accelerate. Well, did they? 20%, 21%, 27%, 30%, 36%, 39%. Next quarter, you look at the comp that they have in quarter two. You look at the comments in their earnings call. They're up to 124% net dollar retention, which does not fully account from the acceleration as well. I think it's highly likely, especially that how aggressively they guided, that they hit at least 44%. And it's not just top line revenue. That's the thing. Like, look at this. Adjusted operating margin just continues to increase. Rule of 40 continues to increase. It's ridiculous. Are they too expensive for me to be buying here? Yes, they are. But a phenomenal quarter. And it doesn't bother me at all, the price action. You know, I've hedged part of my position anyway. Sold covered calls, enjoyed that revenue. My goodness, that's lucrative. So,
yeah, the price action is not bothering me either. This is not like and I told you so or anything. It's barely even a move. So
Tannor, what price? If you had you have to pick a price now, and we're not going to hold you to it or anything, but let's say Palantir, something crazy happens, a glitch or whatever.
Yeah, but I don't know the product well. So like, so the way that I think about it is a couple different ways. If you're taking legacy companies like AIG and you're doubling their 5-year compounded annual growth rate, I mean, there's no stopping the stock price in a way. You're just an enabler for all future growth. But I don't believe that. I think that's insane. Or else, why isn't their phone just off the hook?
It is.
I mean, Tannor, they're doing 39%. I feel like something's ringing off the hook.
But 39% is not 239%.
Okay.
So, I mean, there's a lot of companies growing triple digits, and this company's growing in 30s. It's like, that's actually...
Wait, what companies are growing triple digits besides NVIDIA?
HIMS.
Not triple digits.
They did just grow triple digits. They grew 111%. I don't know what triple digits means to you guys.
No, but
that's
what tech
that's
company?
An asterisk.
What's SaaS
as a whole? That's an asterisk.
Yeah, but there's not a lot of companies that are, enabling that type of growth. So you could say other than NVIDIA, but like NVIDIA is enabling that type of growth, so that's why they're growing like that.
It sounds like you need to buy some HIMS there, Tannor.
I don't want HIMS because I don't understand it. Similar reasons. I just
no, but are you saying they're lying about this? Like, what are you saying here?
No, I don't think they're. Well, one, it's not their claim. It's AIG.
Alex Karp was invited to AIG's Investor Day a month ago to talk with the CEO at the conference. So what do you mean by you don't believe them?
I don't know if that's completely due to Palantir's AIG or Palantir's AIP.
Okay, that's what you're saying.
So, like, it just seems insane to me that, like, did you go from 0 to 1 in terms of technology and everything was paper and now you finally picked up your first piece of software? Or like a company can go from like, I don't know, Datadog to Palantir and double their expectations for growth because of the massive data unlock that they've just acquired there. I don't believe that.
Well, if you were to believe that, and Palantir gets that for the next big companies, multiple of them every quarter.
Why isn't Robinhood using Palantir?
Well, I mean, I think you're being too semantic here. Like, it's an insurance company that's testing out agents and agentic workflows to figure out if it can help their business.
It's doubling their revenue. I don't feel how that would be like, you see, whenever people realized what AI could do to their business, it was like an unlock like this across every single business. The whole world stopped to switch, their outlooks going forward. If this is what Palantir is doing to businesses, and it's probably why they're getting the valuation that they're already getting, but the whole world should be picking up their phones and calling Palantir. And that to me,
guys, pick them up, call.
I mean, well, we might. There's a lot of quarters left this year. We might see what you're asking.
Yeah, but so hold on. Let me finish my thought here real quick. If that is what is happening, and growth is going to continue to accelerate from 39 to 45 to 55 to 60, then your valuation is going to play out like so easily. But that's hard for companies to do. That's never been done.
So you're saying if they get to 50, 60% growth in the next couple of years, you're saying this valuation is justified, essentially?
Yeah, I mean, of course. Yeah, if they continue to accelerate growth and then hold that for long periods of time at ever increasing margins, yes, any valuation, if there's no gravity on the stock, then the stock price can go wherever it wants. But
So
I think that they will face growing pains like every single business has ever faced.
So go back to when NVIDIA had their first and their second NVIDIA quarter. Remember the comments that were said at that time, but not just by random people on the internet, but by analysts. They said these numbers, some of them, not all, but some said these numbers are too good to be true.
Mm-hmm.
Some hinted at fraud. Usually analysts tried to not use that word, but they essentially did that. Or this is temporary, this is not real, this is going away, that there's some like funny magic number stuff here, that there's some ridiculous claims. And well, did that end up being correct? No. NVIDIA is legit, it's real, it's here to stay, it's durable. Now, with Palantir, I hear where you're coming from, but like you can see the acceleration. You can see not just I think that's one of the reasons why I really like the earnings call. They handled it very well with Ryan first, and then Sham after that, is they allowed the customers to speak for themselves. They do that at AIPCon. You see that in the earnings call as well. When it actually, this is a good thing for you, Tannor. I know you're probably not interested, and you don't need to do it. You have great investments anyway. But if somebody is interested, like go back in quarter and search for NVIDIA comments and look at the shift. Basically, they were mentioned here and there during that NVIDIA moment, back a couple of years ago. And then look at how often they're mentioned and how they're talked about now by other companies in their own earnings call, because they're using, and they see what NVIDIA is doing at a level that, we as consumers, we can touch some of the products, but a lot we can't even begin to. So this is not going to grow 50%, 60% year over year. I don't think, like, that's very unlikely, but I could see it grow 40-something% this year. And it's phenomenal. It's accelerating. The moat is incredibly deep. I think it's actually deeper than NVIDIA's, and NVIDIA has one amazing moat.
My expectation is that it will grow 40+% this year. Will it do that next year?
Probably.
So two things. One, I want to highlight what you just said, Roy, and it goes to Tanner's question. Are we forgetting the whole point of NVIDIA is to do what Palantir is doing? Like, NVIDIA is building the hardware, and eventually these GPUs have to be used in some type of use case. That is and I remember talking about this like 2 years ago. Like, if you're bullish AI, you're bullish Palantir because you're bullish on the infrastructure build out, which is undoubtedly cheap. And Tanner's made that point very well.
I'm
but
bullish.
Once that's built out, you need something to do with it. Right?
Yeah, I'm bullish Palantir software. I'm not bullish Palantir valuation. It's
but so the next point of your question is, can they grow 40% compounded? If this is a multi-trillion-dollar market that, for example, I made this point on Palantir Weekly. Cursor is an AI startup. It helps you it's like AI coding. They went from 100 million in ARR, fastest company ever, to now 300 million, $10 billion valuation. I mean, this is faster than ChatGPT type of growth. If that is the type of life cycle we're in the broader theme of AI, and then you've got one of those enterprise companies that's actually implementing all that AI in companies like AIG, and they're getting these results. I mean, I think for the next 3-4 years, they could grow 40%. It's a lot to ask, but if they do that.
Yeah, but this is the exact, I completely agree with you, but I'd rather buy the company with the forward PE of 20 than the company with the forward PE of 400.
No one's saying you shouldn't do that, but Roy and I's point is just like, you can definitely make a case to say maybe not 120 is fair value, but it doesn't have to go to 30, 40 like a lot of people think.
Yeah, I was just more curious, like where your buy-in point would be. Like, is it 60? Is it 30? Is it 10? I mean if you're not buying at 10, I don't know.
Like going from like 13% to potentially, like, without the Europe slowdown, like 49%. Like, that's insane.
And Europe's coming, dude. Like, eventually Europe has to join this party. They're not here yet. But Palantir just got a NATO contract. We know that's going to give them inroads into the rest of Europe. And that's not just like pie in the sky dreaming. Like Europe companies will collapse if they don't embrace the future. Like their margins just won't be able to compete with every other company in the world. So there are a lot of
that's the thing that I have problems with even understanding. Like if a product is that real, doubling companies' revenues, I mean, why do they need inroads into any conversation? Why isn't it just
because Europe thinks Palantir is an evil company that's going to steal all their data, and so that's a more sociological phenomenon that's going on. But once you get through that,
until I start seeing like why isn't SoFi, Robinhood, Nvidia, like, I mean, we laugh at that, but if this is a company that's just in doubling companies' growth, 5-year CAGRs, that seems brain dead to me.
Yeah, I mean, it's obviously that's not going to be the case with every company, and we see like when Kohl's or Walgreens actually was very interesting. Look at that comment in their earnings call itself. Like, my goodness, that was I think the biggest impact is actually. And I've heard it argued the other way, which is a little bit strange to me. But the biggest impact are those companies that really have not handled technology very well and are really far behind, do a lot of manual processes, and they say, okay, it's time for a switch. And then they switch, and my goodness, man, it really helps them a lot. Now, companies like Robinhood, could Robinhood theoretically benefit from adopting Palantir technology? I think so, but would it be like a meaningful doubling of the CAGR? No, absolutely not. Like it would be incremental.
Also, real quick, Robinhood is a tech-first company. AIG,
exactly.
BP, Airbus, they aren't, right? These are legacy enterprises that have no idea of what technology is, whereas Robinhood.
But I remember an interview with Alex Karp. I think he was talking about Panasonic or something like this, and he was talking about the more technological forward companies are adopting us at faster rates because they understand our difference.
No, I think you're missing.
You guys remember that?
Yeah, but his argument is companies that want to be data driven and looking towards the future are calling them up. But like a Robinhood is not going to. First of all, Robinhood has such a tech culture and tech DNA that they're not going to call up a Palantir and say, "Hey, can you make us more efficient?" Like Robinhood's, they're already implementing agentic workflows. They have a ton of AI PhDs, but like a freaking Airbus doesn't because they make airplanes, right?
But I mean, Robinhood's picking up the phone and calling Galileo and saying, "Hey, we need help with our back end."
Hold on, that's a B2B payments API. You're not comparing that to enterprise digital twins, are you? Like that?
No, but that's what I'm saying. Is just if there is unlocks for every business in every sector, and all of these quotes that every Palantir bull says of like, "Oh, well, you know what? The next B2B payments company is actually going to be Palantir, and Palantir solves this, and Palantir solves this." Why aren't those calls happening?
So the biggest barrier is actually the internal engineering team that oftentimes, or management, that they think, well, you know, it's a great product. And I don't think that there's many people that dispute that it's a great product, but they're like, you know, maybe we can't get a doubling of our CAGR from this much cheaper product, but we can get, you know, like a little bit less than that. And it'll be a lot cheaper. So they go and try that. And usually, but not always, usually it's not nearly as effective as they expect. It costs a lot more. And then they realize, you know, years down the road, a failure. And this happens at the government level, even more extreme. But yeah, this has always been the biggest barrier for Palantir is internal teams thinking that they can handle this stuff. And they try to build it the exact same way where they do stitch together the Frankenstein monster. And they can't do mostly. There are some exceptions out there, what Palantir does. Now, one of those companies that adopted and has been using AI quite a bit internally, but also accelerating it and getting things ready as far as a consumer-facing product, and also on the developer level, is PayPal. PayPal has been talking about, if you go to like PayPal.ai, they even have a whole website. And it's not just, let's say AI 1,000 times and see our stock price rise. They're not doing that. You know what they partnered with, though? It was Anthropic. Good company. I don't know if in the model context protocol is interesting too, but the personalized AI shopping agent seems like a very great leverage play for PayPal to have amazing results. Because I do see at some point in the future that like rich people, they don't have the time, but they do have the money where they can pay a personal shopper to go out and get exactly what they want. They don't have to do it through like a DoorDash or Instacart or anything like that. They have a real person that does that. The next level of that, that's more accessible for all of this, is to have an AI agent that actually does that knows our preferences, that knows our shoe size, knows what we want. We just kind of explain. And then it's like, hey, how about this and this? I found these coupons for you. Okay, great. You want me to go ahead and ship it to this address? Great. And you're good to go. You hit the button and you're done. But the question is, will it work in a successful way without the hallucinations? How do they control that? I know that there's some other solutions, but I'm like, man, I'd be a whole lot more bullish on this as if they were using Palantir.
Well, they should have called them. I don't know.
They should have, honestly. My brother, betrayed me and went after Anthropic. It's like, come on.
Man, I have no problems buying expensive tech. And if there is ever a crazy dip where Palantir somehow ends up getting much lower, it does not need to get back to where I sold it the first time. It needs to get back to a valuation that I think is respectful, which I think you guys asked what that is. After this 49% like it's probably somewhere around 50s, which is higher than what I would have said before I saw this quarter. But 120 is a long way from that.
Yeah, look, I think Dan Ives does not help by saying it will go to $1 trillion in 2 years. I think he is really, and he's a friend of mine, he's been on the channel, I think he's ruining a lot of his credibility by saying that. I was just on the phone with Steve, and we both could not believe that he said that. That is putting the expectation way too high.
Yeah, he just called it the next Salesforce like 2 months ago.
And Salesforce is not $1 trillion. So
I know it already surpassed. Like the number just keeps changing to meet the bar.
Yeah, and look, Dan Ives was right on the thesis when everyone was wrong about it. But now when the stock is basically 7x from when he made the call, the numbers really matter in terms of valuation, especially on earnings, right? Especially when they pump into earnings. And so he can't say stuff like that. That's just irresponsible to me. But my perspective on the entire earnings was, you guys said everything great about the numbers. I echo all those thoughts. I just felt the stock pumped a bit aggressively going into earnings, which is what happened in May of 2024. We went from 20 to 25. Great numbers. Wasn't as good as this quarter, but we tanked back to 20. And this time we went from 60 at the lows of April to 125. Great quarter, but it's just aggressive. So I think a lot of people were emotional today, but not the people that I called up after hours who've been in the stock since, single digits. They were like, all right, cool. It's down 10%. Who cares? Because the company had such a great quarter, right?
I really wanted it to go to 150 because a story is a story. I wanted to see it. Let's see this play out. I want to see how high it could go. It might make new highs over the next couple of weeks or something. Who knows? These are crazy companies or crazy stock movements. But
I probably would have sold about 10% of my remaining position at 150.
I might have had to sell at 150. Yeah, 150.
Maybe more. Yeah. Could it happen? Yes, but it's either inflation is out of control or we're in a crazy, crazy bull market. The likes that, are even more extreme than COVID. I don't see that. So,
well, that's also a really weird point, right? Palantir was deemed to be the biggest bubble ever in February when it was at 125, but the whole market was crazy.
I would still call it the biggest bubble ever.
Okay, so then market collapses, Palantir collapses with it. Market doesn't come back to all-time highs, but Palantir does. And that, to me, believe it or not, is actually pretty damn bullish. The fact that the market's able to, in the biggest bubble ever, you need everything to pump for the bubble to get to the point where it pops. Bubble pops in February, you have all this tariff volatility, and then the biggest bubble ever gets right back to where it was. How does that make sense, right? I don't think that's retail. I don't think retail has enough capital to really, or maybe I'm underestimating retail, but I think that's big funds that got excited, probably got FOMO, and bought back in. And I really wonder over the next week, where does this stock end up? Because if we settle in around 100 to 110 after the numbers that we got, which I wanted 45%, we came in at 39. I think that's a win. If we get to 80 or 100, I think that's also a win. If we get below 80 back into the 60s, 70s, then valuation got too aggressive to be able to match up with this multiple.
You brought up. Oh, sorry.
I would love, though, if it's getting to the 60s and 70s, man, just keep going to the 40s. Get it down to a price where I'm comfortable to begin to add again.
Well, you're gonna get a lot of nasty DMs if that happens. So let's just
I've seen it.
Comments if that happens.
Yeah, you guys would see me as a guest on Palantir Weekly if we get back to the 30s and 40s.
My favorite thing is when I'll occasionally mention, like, I'll put something up on Palantir and somebody will mention valuation. Be like, yeah, it's extremely expensive right now. I wouldn't buy it. And then somebody comments and like, oh, sounds like somebody missed the boat. It's like, yep, sure did. It's totally not half of my portfolio, and my average is totally not in the 12s.
Yeah, that was funny. I see this a lot. Like whenever I said I was selling Tesla and buying Nvidia, people are like, "You're way too late. You should have bought in 2021 and stuff." I was like, "You guys are idiots. Like, go watch my channel, man." It's like they're like, "Oh yeah, this is a great place to enter into Nvidia." Okay.
Did you you made a good chunk of cash on Tesla? Like when you sold it, did you feel good? Like you made some good money?
No, I don't know if I felt like good about it. Like the way that I think about it is like every day that you decide to hold a company and not sell it, that's kind of like your gain. You know, like if it would have ran up and then fell down, that would have been loss. It's not just from where I bought in, because every day I chose not to sell it. That was another critique, by the way. What?
If you see Tesla go up to like 400, how are you going to feel? Are you going to care or?
Well, it depends on where Nvidia is. So that's another thing too. People were like, "Oh, you sold pretty low comparatively." I'm like, "Yeah, but Nvidia's down too. Like, I'm not buying Nvidia at 150 here. You know, like things are lower now. So, and plus, it's whenever I underwritten it. Obviously, it would have been better for me, but that doesn't mean that because I didn't get like, I don't know. Another thing that I really try to live by with investing, like whenever I fell out of love with PayPal, I wasn't like, oh, I need to wait for this to go back to 90 so then I could get out. It was like, no, I need to get out now because this is whenever I feel like selling.
Yes.
So I felt like Tesla was overvalued. I don't know where the market is going to go, but it's overvalued today. So should I trust that the market is going to stay like fool-brained or stay delusional and pump this back even higher than what I think it is so then I can get to a place where I think there's sort of a range? I don't believe in ranges. Maybe some people believe in charting and stuff like this. I'm not a guy that's into astrology. I'm just looking at the valuation of where it is today. I thought it was overvalued. I hadn't underwritten it in a bit. I'm out. That's it. Simple investing.
All right. That's fair.
By the way, I love whenever you guys make money, and I hope that Palantir continues to run. I'm not shorting it. I don't have any placements anti you guys. So whenever I make comments, I hope you guys just know that they're, just jokes or something like this. Like,
yeah, I mean, like your concerns are the same concerns Roy and I have about the valuation. So
sure,
it's friendly back and forth. But I just think a lot, like even in the chat today on the Pound, I think there was a lot of new people in the community because the chat was just like super like upset, and I'm like, I don't know if it's just if it's just like a knee jerk, people are upset because the stock's down, but like if you're a bull on this stock, you've been watching the channel for years, you cannot be upset about this quarter. And you definitely can't be upset about the stock down. I mean, you're up freaking 20x, 15x, like, or at minimum 3-4x if you started watching a year ago. So it's like, I think there's a lot of new people that got into it. They probably got burned buying it at 120, thinking it was go to 150. And that happens. It is what it is.
Yeah. No, I mean, fundamentally, it was great. And if there was no stock price attached, you would have thought that the stock had just ran on that, report.
100%. Yeah.
So, things were good. And it's so funny because they go from non-video to video for Palantir. And whenever it's switched to video, man, you cannot help but smile whenever you see Alex come on and talk. I mean, he is such a personality. Talk about like a ton of fun.
Dude, well, here's one thing. I think we can end the show off with this. So there was a great post over the weekend, of a guy who sold his Palantir. Did the post get deleted? Hold on, real quick.
Also, while you're bringing that up, that picture that you brought up about the annual recurring revenues across all those different AI plays, that is a picture. I need to find that tweet. I'm going to put that in my next video. That is great for Nvidia too. This is not all just bullish for Palantir. These are Nvidia plays. We're playing in the same space. I'm just in a different part of the supply chain here.
Yeah, I think it's just easier for you to see their moat versus Palantir's. And fair enough, it's a business product, unless you put your hands on it, like you know what other people say about it, which is meaningful, but yeah.
I was going to share, it ended up getting taken down, but I think it'll be reposted tomorrow. But the point is, there's this guy who posted on over the weekend. He's paying off his mortgage by selling off some of his Palantir. And it looks like Karp saw the post, and through Iliano, Karp is going to send him like a bottle of wine or something and saying congrats on the house. You know, so it's like that's the type of CEO you have right here, who sees a guy saying, hey, I'm selling the stock, but is like happy that you made life-changing returns because you believed in him at his $10 average 3 years ago. And
he's a billionaire?
Karp?
Karp is a decabillionaire.
Yeah. Okay.
He's richer than Vlad, not than Elon, because Elon's way up there. But man, yeah, the SBC that he got from Palantir, and it's well deserved. It's pretty immense. I remember it. I'm sure you remember this too, Amit. This is years ago, 2021, I think, that he sold some more shares than I think was expected, and people were like lambasting him for being a sellout or whatever. But like he does periodic sells, their planned sells, and then it came out later like he bought a homeless guy a house.
Yeah,
that's why he sold the shares.
Well, that's what I was gonna say. I'm like, if I was a decabillionaire, dude, I would not be sending a bottle of wine. I would have just been like, little note, keep your Palantir shares. I'll cover the mortgage. It's a freaking $10 bill for him. Not even like, you know.
The broader point is that he's like, he sees what retail is doing. He's engaging with retail because retail believed in him when no one did. We'll wait till the 13 or the 8K to find the institutional ownership. But from my understanding, it's 50-50. And one of the big concerns that Jefferies, Brent Thill, who's an analyst who's, I wouldn't say bearish, but his price target is much lower. His argument is, hey, institutions don't want to touch this thing. And then you've got all these other sell-side analysts that have $90 to $110 targets. And the Morgan Stanleys, the World Bank of Americas, that are obviously talking to institutions. That's what they get paid for the research for. So maybe a lot of institutions don't want to touch it, and that's who Jefferies is consulting with. But there are institutions that are interested in the name. The question is, when does that 50% turn to like 60%? Because I think that would be a big deal as well. All right.
Dude, let's wrap.
That's it. Thank you, everybody. We'll be back next Monday. Again, this will be a Robinhood focused podcast for the beginning of the show. And then towards the end of the show, we'll talk if there's other topics to discuss about what else we've got going on in tech.
Yeah. If it's like there's such a crazy change in Robinhood and it covers an hour, then we're not going to transition away from it. The main focus will be Robinhood. But this is also a nice change too, because I don't know a lot about Palantir, and this feels like a little bit of a safe space for me to learn from the experts here. So that's nice.
And I can be a PayPal shill. There it is. And hymns.
And hymns. There you go.
Yeah. You didn't get to talk about PayPal, but
I did a little bit.
Quarter.
I'll get in there.
Yeah.
Man, they
no.
I won't add anything to it, but guys, PayPal.
Tanner's got to eat dinner, bro. Tanner just had a snack before dinner. Now he's got to eat real dinner. So
you got to stop going before he gets going.
He's eating something. I'm like, what are you eating? He's like, oh, it's my pre-dinner snack. I'm like, all right.
Be late.
Thank you, everybody. Appreciate it. We'll see you back on next Monday. I'll be live for the market open tomorrow. And we'll be back next week. Bye, everyone. Have a good one.